Okay, I'm here at the Mortgage Bankers Association's 2026 Commercial Real Estate Finance Conference with Drew Fung, Managing Director and Debt Investment Business Leader at Clarion Partners, and we'll be discussing the state of private credit investing in commercial real estate. Drew, thanks so much for taking the time to speak with us.
Hey, great to be here, Gabe. It's lovely San Diego weather.
Absolutely. So, what are some trends that you're observing in credit markets related to commercial real estate investment?
Yeah, right now the real estate finance market is very liquid, meaning there are many lenders of all different ilks that are eager to provide capital for the right deals in real estate right now. So there is competition. There is certainly many different options that borrowers can opt for when they're looking to finance their properties, but it's a very liquid market right now.
Certainly. With this liquid market and for these, more specific deal making strategies, has Clarion Partners made any changes to its origination models or capital structures?
I think what we've done is just because we see some changes in the property types that we feel have really good long-term fundamentals. We've put a real focus on some of the alternative investment property types, things like senior housing, industrial outdoor storage, also known as IOS. In addition to our strong sort of presence in multifamily lending and also in the industrial lending space. And another thing we've done is we feel there are really good opportunities in the ground up development projects. So we've focused on mezzanine, preferred equity type structure in ground up development as well. So that's we found is a good way to sort of track better real risk adjusted returns in some of these alternative property types.
Sure. And you mentioned all these various asset classes. Are there some you feel that are maybe more resilient to risk in this environment?
Yeah, I think where we're seeing some of the greatest opportunity now is in the senior housing sector. So, assisted living, memory care, and independent living type facilities, just given a very sort of, it's not cyclical. We see it as sort of a very long term change in fundamentals, favorable fundamentals for senior housing. And we've all heard sort of the silver tsunami, but beyond that, we also think that you know the demographic change coupled with the lack of good quality existing product is ripe then for us to make some loans in financing development in the senior housing space in the right markets with the right operators. And there's a lot of very specific skill sets and things you need to understand in senior housing that, we have a team that's very dialed into that. So taking advantage of that.
Sure. Are there any other asset classes or credit structures that you hope to branch into this year in this investment cycle?
Yeah, I think, again, industrial has always been a very strong asset class for Clarion Partners. So we continue to look selectively at industrial development. We're looking at some perhaps shallow bay, which is a smaller subset of the industrial sector, but we think again good fundamentals there on a secular basis. And then I would say we really have a conviction about multifamily and what I'll call sort of the housing sector, right? But it goes beyond just your garden variety apartments. We're looking at student housing in places built to rent. So those are all, slightly unique sectors within the housing market that we have a lot of will continue to be attractive places to lend.
Yeah, the more refined, the better, right?
Yeah, yeah. But again, you need the AI is helping us analyze the markets, and we have a really terrific data science team and research group that is helping us refine those viewpoints on all those different asset classes. So that's an exciting new-ish type change for us. We've always been research based, but what we can do utilizing some of the AI is really bringing it to the next level.
Sure.
Yeah.
Well, Drew, it's been a pleasure. Thanks so much.
Gabe, it's great to meet you, and thanks for having me.
Absolutely.